How is everyone doing? I know everybody's all busy trying to get ready for whatever festivities you have planned for this week if you celebrate Christmas. So I want to first say Merry Christmas to you and Happy New Year because they're like a week apart. So I just wanted to stop in and give you a quick video just on some highlights on how small businesses will be impacted by the big beautiful bill that will take effect for tax year 2025. So one thing you may already know is the tax code is really meant to benefit married couples. It's meant to benefit investors and small businesses, as well as very wealthy businesses. The people who pay the most taxes are W-2 employees. This video is specifically just speaking to small business owners, so you already know the key to one of the recipes to save money on your taxes by some sort of entity structure that you may have. So I just want to give a quick few things and I'm gonna get out of your way. So here we go. All right. How will this bill impact your tax strategy? So the first thing I want to mention is the qualified business income deduction is now permanent, 20% for pass-through entities. A pass-through entity is going to be your S corps, your partnerships. And this is actually an additional deduction that comes across with your income if you're specified that will help you reduce your taxes. So that's something to consider. It's actually a good thing for those in those categories. C corps do not qualify for that because they are not a pass-through entity. Pass-through means that it not only may you possibly, if you're an S corp, you would do an 1120 form as well as 1120 return, as well as you would do a your 1040 would also pass through the income to you as ordinary income. But so that's what a pass-through entity is. Your income is passed through from the entity itself to your 1040. And this is actually a good news for those who do have your own business because again, like I said, it's the deduction you take on your taxes. The biggest thing I think to note is those who may have big ticket items that you bought in 2025 effective after January 19th of this year. 100% bonus depreciation is back for those who this is for individuals and businesses actually. So if you run like say for example a trucking business or some heavy machinery, if your asset is purchased, it's over 6,000 pounds, and you bought it after the 19th of this year when the new administration came into the office, they're allowing in that first year 100% depreciation. That's big news on new or used items. So definitely check into that when it's time for you to file your taxes. But that's a big advantage. Granted, you if you have a vehicle, it has to be over 6,000 pounds, and it has to be assembled in the U.S and you had to have bought it this year, this tax 2025. You'd had to bought it then, and you can get that 100% depreciation, but you must use that item for that vehicle for more than 50% of your business. If you're using the item for less than 50%, that's where it's a little gray. So I don't think I've seen the IRS address that specifically because some people use their vehicles for less. Maybe you use it 10% of the time and the rest of it's personal. Definitely 50% up, you can do 100% depreciation, like totally expense that vehicle. But I think more guidance is going to go to that because there's a lot of gray area when it comes to when you use it for less than that. But those who are in businesses where they're buying heavy machinery and it's going to really benefit them because they can write this off against their income. So that will really help them out. Research and development, that's an immediate deduction. So you can amend your returns for the past 3 years. That's good news because that's tax savings that allow you to save some money if you do that. So make sure you keep that in mind. Look back and see. And again, this research and development is going to pertain to those who are inventing, those who are in maybe scientific fields, those type of things that are research development for a product that you're creating, whatever that might be, whatever tangible product that is. You might want to look into that because that's actually a great opportunity. Of course, I mentioned bonus depreciation again. Didn't know I put that on the slide again, so please ignore that. Last thing I want to mention is the Section 179 has increased. That's depreciation on your assets that you buy as well this year. It's increased the threshold from $1 million to 2.5 million. And again, these are big items for companies that are doing a lot of volume with large assets that have a lot of cost, and this is going to help them with their businesses. Another thing that I didn't put on here that I just want to mention again is if you finance, this has nothing to do if you itemize or not. And I did mention this in my individual Big Beautiful Bill impact. If you financed a vehicle, new or used, and you're paying interest on it, that is also deductible up to $10,000, which is huge for those who cars, have the cost has gone up, especially since the pandemic in purchasing. So if you're able to write that interest off and you're not an itemizer, that's a great opportunity for those who may have be in that situation with a debt that they owe on vehicles. So I want to wrap that up. Basically, just wanted to hit it and quit it today. And I wish you a Merry Christmas again, and just mention just a few impacts that small businesses have. So I want you to be careful, have a great time, enjoy your family and friends. Take care. Till the next episode. Bye bye.